If you talk about the volatility Nifty has seen this year and how the momentum strategies have often never worked during periods of market downturns, that has led our research team to analyze the allocations of the focused and value-based mutual funds and how one of the sectors that could be a contra pick. Mihika brings in the details. Mihika, from the analysis, which is the sector which has become a contra pick right now, and what are the key details you should be watching out for those companies?
Yeah. So it's actually the gas transmission space that has come forward. We looked at what focus funds have been selling and what value funds have been buying based on the monthly as well as the annual change in their average holding and allocation in the space. Focus funds has been selling gas transmission, realty, construction and IT, while value funds have been buying gas transmission, banking, chemicals and non-ferrous metals. So it's the gas transmission sector that does coincide. Now the key question is there value in gas transmission space? And we're asking this simply because of the investment strategies that a focus fund and a value fund follow. A focus fund is more concentrated, thereby they buy what's going up and sell what's going down. However, value funds analyze a stock based on fundamentals and often select stocks where the markets are not in their favor. That's why they're buying what's going down, but at attractive valuations backed by fundamentals. Now, what's working for the gas transmission space is stable and rising CNG as well as PNG demand, expansion into new geographical areas, lower competition from alternatives, as well as better clarity on margin trajectory than what we had last year. Now, last year we saw a lot of deallocation and then reallocation of APM gas. And just in the start of April, we saw the APM gas allocation for gas stocks again cut, but this will now be replaced by new well gas. Now, new well gas is cheaper than other gas sourcing options, however, just $1.3 more expensive than your APM gas. However, this, if replaced well, if the cut volumes are replaced well, then analysts say that margins can improve for something like an IGL and MGL. That's why the margin trajectory going forward is much clearer. In terms of the valuations, the 1 year forward PE currently for an IGL and MGL stands below than what the average we have been seeing in the past year. So we have current valuations below the historical average. Even in terms of earnings potential, so now if you go to see, IGL has also posted its FY25 numbers, and the growth expected in its revenue, EBITDA and net profit stands at 10% and 15% for the revenue and EBITDA. For something like an MGL and a GGL, it's key to know that FY25 numbers are not yet to come in, but these analyst estimates are based on consensus estimates. But even they are expected to see growth here on MGL of 4% net profit growth, Gujarat Gas is 17% net profit growth. Lastly, we're looking like what does the street think. For something like an IGL and MGL, the street is largely bullish on the counters, 18 buy calls for an IGL, 21 buy calls for an MGL, and relatively lower hold and sell calls. Even the earnings potential stands at 10 to 14%. However, lastly, Gujarat Gas has more of a bearish sentiment with only a 2% potential upside.